Well, good afternoon, ladies and gentlemen. Welcome to the 93rd IREPAS Conference afternoon session, trading session. As usual, what we do is we ask the attendants to send us their questions so they don't have to show up to find out what the answer is anyway. And what we do is we try to answer some of them ourselves, and we're hoping that we can really talk about it and discuss that here with us. I personally thought that this is probably the toughest time going on for the traders. I know that mills are squeezed, but the traders are even more squeezed. So we need to really hang out with each other and discuss our ways out and decide what we can do next going forward. Anyway, when we look at the questions, majority of the questions were about China, which only makes sense because they produce more than half of what the world produces. So on that note, we can probably start with the questions that's already been sent to us. Are they going to show it there, or?
Used to be.
Will you be showing the questions on board? Yeah. Okay. The first question is, what are the changes in 2023, 2024, and 5 production in China? By the way, luckily we have Hussein here, who is extremely knowledgeable and works with one of the leading Chinese trading companies. So I'm sure he's well qualified to respond most of the Chinese questions. So I'll leave the floor to him.
Thank you very much. First of all, good afternoon, ladies and gentlemen. Since we have not completed 2025, so of course we don't have the yearly the production quantity of China. So that's the reason that in order to compare the production in 2025 compared with the 2023 and 24, so our comparison is going to be monthly production quantity in China. In China 2023, the monthly production was 84 million ton. In 2024, it was 83 million ton. And in 2025, the quantity that the China monthly produces is 84.93 million ton. So as we can see on the figures, the production of China in 2025 is not coming down compared to last year, almost in the same level. Globally, when we look at the production, the world production, we clearly see that in 2023, 154 million ton monthly produced in the world. And in 2024, it was 153 million ton monthly. And also in 2025, it was 155 million ton. So compared to previous years, the monthly world production, steel production is already increased about 1 million ton monthly.
By the way, do you know why he's always talking about monthly? Because if we say yearly is so big, the Chinese make it small. They talk monthly. In the future, they're going to say, weekly, we produce only this much. I'm so sorry.
No, it's okay. And also the daily production is coming up as well in the next questions.
Most probably you will. Can we go to the next question?
Yes, please.
Okay. All right. What are the changes in, again, 2023, 24, and 25 import and export China for long products, flat products, and total exports in year?
Okay.
Yearly.
But we have to go with, again, monthly production.
Okay.
As you know, in China, actually, this is what we keep on telling is the Chinese, when we look at the China's export, actually China is not a big exporter. For example, compared to Turkey, is very small exporter for the percentage-wise. Percentage of the total quantity of the itself. So Turkey has been exporting about 50%, we can say, and China is only exporting 10% of the total production. But so since the total production is more than 1 billion ton, even we don't tell the rest of the quantity, which is more than 1 billion ton, but that the rest of the quantity is also representing about 150% of the more than total production of Turkey, which is the 8th biggest producer. So flat production export and the long production export, when we talk about the flat product, is representing about the 60-65% of the total Chinese export. And long product is only 14-15%. And the flat product this year, we've been seeing some slightly decrease on the export of China. But long product is increased. When we say long product, of course, we've been also adding billets as well. So in 2023, in order to compare, again, monthly production was 4.97 million ton. It's close to 5 million ton for flat steel export. In 2024, it's increased 6.22 million ton. And in 2025, it's about also 6 million ton. Compared to last year in 2024, we've been seeing some slightly decrease. But this time, long product side, we've been seeing some increase in the export of the China. For example, in 2023, monthly export was only 900,000 tons from China to all over the world. This figure in 2024 was 1.12 million ton monthly. And in 2025, it was 1.53 million ton because of the billets and slab export generally as a raw material. So total export of China in 2023, monthly export was 7.52 million ton. In 2024, 9.22 million ton. And in 2025, we can see 9.68 million ton, which is the highest compared to 2024 and 2023.
So it keeps going up?
Keeps going up, same as production. So there is no production cut, there is no reduction on the exports.
Yeah. Well, that's not what they promised us a few years ago, that they're saying that they're going to hold the production. In fact, they're going to reduce the blast furnace production. Anyway, next question. Any expectation of further production cuts in China, the capacity utilization rates in 2025 compared to previous years?
Now, rather than going to yearly numbers and the monthly numbers, now we will be going with the daily production of China. In 2024, daily production was 2.29 million ton, which is 2 million, about 300,000 ton daily production. But this year, although we've been hearing that there are some production cuts in China, this year 2.41 million ton, which is 2,410,000 ton production. The capacity usage last year and previous years, it was in the level of 85%, 86%. But this year is 90% of the utilization rate in China in the production. So, which is also give us a pictures that the production in China, as we talk in this part of the world, China has been not losing money in the production of the steel. So it's still profitable.
Okay. Anybody has any comments on it? Okay. The next question. Current stock levels in China. That's interesting. Do they disclose that?
Yes, because in China there are two different stocks area. One, as they call it, social stocks, one official stocks. Social stocks means, as you know, in China, most of the ports belong to the government. and the quantity which we've been holding as a stocks in the government port. So we are able to reach that quantities. And also, when we talk about the quantity which is also held by the factories, so there are two kinds of stocks. So when we look at the stocks for the hot roll coils, iron ore, and rebar, hot roll coil stock level compared to the last 5 years still is in the low range. So, which means the local demand relatively is fine for the hot roll coils, and we don't see the big stock in the port and in the factory port. For iron ore, compared to last 5 years as well, we can say is the average level. So we are seeing that about 9 million ton of the iron ore stock is already stocked, but it doesn't mean that this is not the product that which is not sold. It doesn't mean that the seller is facing a problem to sell this quantity. No, because some of the traders, they've been importing that material, putting in the stock of the port, and some of the manufacturer, they've been making the test, and they've been making daily truck delivery to their factory.
Excuse me, can I ask, this stock level that you have, is it all produced to Chinese standards? Is all for domestic consumption, or do they stock for export quality?
Mainly for the domestic production. Okay. And for the rebar, stock level also, I can say, compared to last 5 years, is the lowest, which means that the local consumption is also relatively fine. So the stock level is low for also rebar as well. And the rebar export in China only 2.5 million ton. Turkey, I can say that is bigger than China in the rebar export still.
Yeah, that's true. But Turkey makes better quality. Okay. Do you see any changes on export of billets and slabs from China?
Yes, especially this year, we've been seeing that the export of the slab and the billets from China is increased. Let us also give you some numbers. For example, for the billets, which is also clearly showing that the billets and the slab export, which is also reflecting as a raw material export in China, is increased. For example, for the billet export in 2023, only monthly basis 155,000 tons monthly exported from China. In 2024, it was only 183,000 tons monthly export from China to all over the world as a billets. But in 2025, 1 million tons monthly exported from China.
From 100 to 1 million?
Yes. So this is the one, although the flat export is coming down relatively, but we've been seeing some increase, especially on the billet sides from China to all over the world. Regarding slab, China in 2025 only 98,000 tons monthly, and 67,000 tons in 2024 monthly export. And this year in 2025, the average quantity that the China exporting monthly is 116,000 tons. And we've been not seeing much export of the slab from China to all over the world, because Southeast Asia start to be in the picture. So compare not only for the slab, not only for the billets, I can say that for most of the product, we've been now another candidate for as a supplier is Southeast Asia.
So what makes the major increase on billets? I mean, did you find some sources that nobody knew? Suddenly you have this huge billet production?
One of the reasons that, as we know, the scrap prices is one of the biggest indicator. So since the scrap price stays in some certain level, so rather than for the importer countries producer, rather than producing their own billets, it's better to get the material or import the material from other country, which is the case China.
Yeah. Well, let's move to the next question, still on China. The work plan requires that by the end of 2025, more than 80% of steel production capacity in China must complete ultra-low emission upgrades. what effect will be on Chinese steel industry?
I mean,
Number one, will it happen?
I don't think so will happen, because we've been talking about CBN about since last 2 years in part of this, the part of this world. In Europe mainly, also relatively Middle East, Turkey, the carbon, but in China, unfortunately, China sector start to know about it about 1 year ago from the conference. So it's not the main subject right now. So I don't think so that the China will affect or will adapt their production into the carbon emission production process. Because when we talk about China, 90%, as we all know, is the blast furnaces. So converting from the blast furnace production to the carbon emission is really big investment. So we don't see that much.
Yeah, that's true. But of course, on the blast furnace, you can also reduce some, especially on your emissions out. Anyway, our next question: how are Chinese exporters adapting to the increased trade barriers? It's a good question.
Actually, we've been already seeing this in the automotive sectors. We have a good example in Turkey, like BYD Chery, because China is not facing a barrier only in our steel businesses. Also, rest of even the medical equipments, automotive sectors, energy. So I can say that the most of them, or all of the sectors in China is affected by the unfortunate barriers. So what we've been seeing, the automotive sector is a good example. We've been seeing like a BYD, Chery, also having the investment in Turkey since in order to overcome this barrier. So personally, I'm also expecting the same thing also in the steel business as well.
Makes sense. So you think they're going to be producing in other countries the same product?
Yes.
Well, we know that they own most of the mills in Vietnam and all that.
Yep.
And so they're going to continue for the rest of the world.
Exactly. Vietnam, Indonesia, Malaysia is a good example. So why China start the investment in those countries first? Because as per our previous experience, when you want to make an investment, you start with the rolling mill first. But the China investor, they start with straight away with the blast furnaces. And those production facilities out of the country, out of China, is actually the sister company of the Chinese producers. So that investment, I believe that is going to expand all over. Whatever we've been seeing in the trading side, we will be also seeing in the production side as well.
Well, Trump wants you to come to US and do the production there, so you might as well come there. Which markets do you think Chinese exporters will continue to target?
Since China is facing with the barriers, some anti-dumping cases, taxes, import taxes, mainly from US, Europe is one of the cases, and we believe that the European Commission also announced that between 25 up to 50% import tax will be applied to Chinese product, because last year the total quantity that imported from China, it was about 370%, reflecting about 4% of the total Chinese export. China has to focus to the country, the market that which China is not facing with some taxes. One of the market is Middle East, Africa, and relatively some Southeast Asia countries. Also, China started to face some anti-dumping cases also from Southeast Asia as well, such as Vietnam, India. So things are getting also hard and harder for Chinese exporters or producers.
Yeah, well, since there's no trade barriers in Africa, like this gentleman was explaining this morning, I think that's your number one target, right?
Exactly. Yeah.
And the last question is, how do non-VAT shipments affect the trade, and how do you think this will play out the prices? This is interesting. You were explaining the other day.
I mean, unfortunately, since last 2 years, we've been facing some non-VAT issues. As you know, China is not normally exempted from the export. Whether you buy the material in China in local market or for the export, you have to pay for the 13% VAT. But we've been clearly seeing that some of the players in the market also reflecting the non-VAT price advantage into their export prices. So it means, which is allowing them to export more quantity. And whenever we've been hearing some rumors that the government is going to more inspect the shipment, documentation, customs, taxes, then that export stopping and the price is relatively getting more stable. So, which is definitely damaging Chinese industry and also all over the steel sector as well.
Yeah. Do you guys have any comments on Chinese trade? Do you have any questions or comments? I think we had plenty of questions already answered. Thank you very much.
You're welcome.
Next two questions about Turkey. Number one is, what is the current cost structure of Turkish mills? Are they able to cope with high costs? Well, I looked at the main, cost drivers of Turkish steel. Number one is obviously energy, and the number two is raw materials. And I just had the time to look at it yesterday on the energy costs in Turkey. I understand is high, and recently there was another price increase on it in June, I think. This makes Turkey one of the expensive places to produce steel with the energy costs that they have. Now, number two problem is they're dealing with this, majority of what they buy is scrap. So both of them, energy and scrap, are both imports for Turkey. Turkey is an importer of energy sources, and Turkey is also an importer of scrap. And the scrap prices are, well, we think that it's steady, but it's still high steady. So the margins for the mills are very much squeezed. From what I understand, as a precaution, what the mills have done recently, also for the prevention or really competing with CBAM, most of the mills are now, the bigger mills, I should say, are now investing in the solar and other renewable energy sources. And that really helps them to really lower their cost for the energy. Plus, they don't have to depend on the local grid, which is not as dependable. So they have found one solution to it, but really the second major cost for them is scrap, and they do have scrap within the country, but from what I understand, it's not enough. So Turkey does import scrap, and the scrap prices is the one big cost for the country. Any comments on this one? Okay, well, I'll go to the next question. And which export markets can the Turkish mills target? I think I'll leave it to the Kibar Holding. There's a lady here from Kibar. She probably can answer that better than me. Why don't we give you a microphone?
Well, it's quite difficult for Turkish mills because they have lost their competition in the world, due to high cost in Turkey. But there are, some markets which, they do not have local producers, and they have regular inquiries and less affected by the recession in the world. So I still say it may be Latin America and Central America. Their potential is low, and their capacity for exportation or for importation is low, but it's a constant market for the Turkish meals right now. But the others are more, subjective.
Don't you think Turkey is easier to export to the proximity, countries like Romania or Albania or maybe Azerbaijan or whatever the countries which has the advantage on the shipment?
Well, that's also an option, but for Romania, there are quotas and tariff and the SBAM, regulations, which is which lays in uncertainty right now. And Azerbaijan and Albania is a small market. I don't think that the quantities there will be sufficient enough for Turkish meals.
How about United Kingdom?
United Kingdom, also they have the tariff and quotas for United Kingdom, and they may, yes, buy good quantities, but also I do not think United Kingdom is a constant market for Turkish producers, but for spot business, I'm sure it's good.
I also heard that Turks are selling to Africa, even West Africa, because they can have small ships go and discharge there. Is that still valid?
I don't think so. They are not so competitive right now in West Africa.
And they're competing with China in those
yes.
markets? Yeah, I understand.
China is the main player there.
Any other comments? Yeah? Okay. Thank you very much, by the way. Raw materials, some few questions on raw materials, and I will need your help in some of them because we're not the expert on it as well. How do you see the iron ore market trend? I looked some and I can give my comments, but I would like to hear more from you all. On the current picture, iron ore is around $100, $106 per ton. Now, the price was softer in the first 2 quarters. From what I understand, the price is now firmed at third quarter, but the volatility still exists, And I think the iron ore price specifically depends on the demand of China. If China is back buying or restocking, the prices will probably move up, and if China slows down, the price will go down. It's the biggest buyer of it. Now, I noticed, and please correct me, I noticed that the price volatility change over there is within 10%, no more.
I agree. When we look at the last 6 months, the iron ore price, the lowest that we have seen, $90, $91. So it's gone up to 93, 95. Then also when it came down, so it was a breaking point again, $90, $91. Now, as you mentioned, is in the level of 103, 104, between 100, 106 dollar. We can say that is stabilized.
Yeah. Okay. Next question is current spread between scrap price and rebar price. Well, I can only tell from the pricing in Turkey, because that's the only data I have. The scrap price is around $330, $340, and the rebar is $535 to $545. The spread is roughly $200, and I think lately it's been squeezed more. It's like $195. It's in that range. Actually, it is low. In today's economy, that's a low margin, and that's the reason why the mills are not happy with the difference. And for that reason, I do expect the scrap prices to ease off, because there's not that much demand worldwide, and the world is really been covered by the blast furnace production in China and India. So I think there's a tendency for the prices to ease up a little bit. And I think we noticed that there's also some scrap accumulation in Europe, and Turkey is buying less. So it's all, the trend, I think, is negative.
Yes, I mean, when we look at, for example, Turkey, we always talking about the problem of the inflation. And inflation is above more than 50%. But what we say that there is only no inflation in our steel business. So for a long time, years and years, the rebar price is between $500 up to $600. Although some electricity cost is increasing, also general fixed cost is increasing in the production, but we don't see any reflection on the end product prices. So unfortunately, now the producers are facing a serious problem.
Actually, that's a very valid point, because really for the last few years, it's not only Turkey. I think same goes worldwide. The prices have been steady, and guess what? We do have inflation in various countries, and I guess with the inflation, even versus the dollar, you don't see that price increases. Everything else you do, if you think about what you were paying for your scotch 3 years ago and what you're paying today, it's a different price. So there's price increases on everything, or your food, or your hotel, everything else is going up, but our steel prices, unfortunately, almost the same. So you can see the squeezing right there.
Yeah. Unfortunately, yes.
All right, let's go to the next question. Future of scrap supply availability, given the expected rise in demand amid the shift to electric arc furnace production. Well, I think this scrap will eventually be tightened, because there's definitely an electric arc furnace penetration in the market. Globally, people are trying to go to that. And with the CBAM from Europe, there's even more push to it. And worldwide, there is a push for the green steel. So that definitely is affecting. China did increase the scrap demand, because China is going to electric arc furnace as well. But we have to also look at it. China is also producing their own scrap. From what I understand, are they in balance, or do they import scrap?
Actually, China, I have the figure of the last year, is only 600,000 tons. Import of scrap is nothing.
It must be local, yeah.
Yeah. The local plus blast furnaces has been only using maximum 10 to 15% of the total, their raw material is a scrap. So China, the rest of them is consumed, supplied by the local market.
All right, I'll go to the next question. This is the same question we hear all the time. Billets versus scrap for electric arc furnace, and electric arc furnace versus blast furnace in terms of production costs. Who do you like, or who do you prefer? What's more economical, really, this question? Actually, it still is blast furnace, because I looked at the last numbers from Columbia University study. Blast furnace approximately is like $390 per ton, and electric arc furnace is $415 per ton, cost-wise. And so there's a $25 scrap spread between them. So definitely it's in favorable, but then depends on where you are. Like a country like US, electricity is very cheap, so I don't think blast furnace will be better off. But worldwide, where the energy is not as sufficient, like including China, they buy their oil, so then obviously blast furnace becomes more economical. So in general, yes, blast furnace is more economical, but then I think it's very regional, it depends on where you are.
Especially the blast furnaces, which is the public company, in the end of the year, they've been declaring their profit, the budget. So what we see that they compare, even we cannot even compare with the electric arc furnace profit level. So last year, the figures that we've been seeing from the blast furnace profit level is more than 10%. But
yeah, right.
For the electric arc furnaces, unfortunately, we don't see it in this market condition. And also for the blast furnaces, as per our information that we've been getting from our conversation in China, from the mill itself, so the blast furnace is still having some certain profits.
I'm just curious, is anybody here from like Algeria or from a country where they have enough energy resources that they can compare those two if they have the both production? Because I know for a fact that in the U.S., the electric arc furnace is just as competitive, in fact, more competitive than the blast furnace. But and obviously China is the opposite of it. But I'm just wondering how it is in certain countries like Algeria or United Arab Emirates and whatever. Any comments, guys? All right. All right. Next question. I think next few questions are in U.S. Expectations after the U.S. issues final subsidy rates for rebar from Turkey. Well, there's two types of subsidy rates. One is countervailing duty. And the countervailing duty recently announced it was not bad. I think the CVD rates were 0.04, which is de minimis, to 2.43%. So I think the countervailing duty from Turkey is not significant at all. Now, anti-dumping duty, I can't say the same because I noticed that they recently went after one mill for like 18%, which is very high. And in the past, there are some mills that had 16%. These are very high numbers. And going forward, it's very hard for the Turks to sell to U.S. because U.S. comes behind and goes retroactive and have an artificial number. It's not necessarily the dumping. The criteria for investigation changes all the time. So there's no one certain criteria that you can follow. What I'm trying to say is depending on when it was filed versus when it was shipped. So they look at whichever is more risky for the seller. They say, okay, we'll look at the contract date, or they look at the shipment date. So it changes. Now, given these two are nothing compared to the 50% Section 232. So when you add that both up, I don't know why Turks would want to sell anything to the U.S. And also, of course, you have to think about when you sell. By the way, I am a buyer, so I'm not trying to discourage anyone for selling to the U.S. But there is a possibility of coming back and investigating your exports and really putting additional anti-dumping duty in addition to your 50%. Any comments on this one? All right, I'll go to the next one. To what extent have the U.S. long steel and raw material markets have been impacted by the uncertainty due to tariffs? Well, it did affect tremendously the market. Most buyers are reluctant to make purchases. They want to wait to see if it's going to go down from 50 to 25, or maybe to 0, because Trump can overnight just change any country from any level to the other one. So people are reluctant to make future purchases depending on what the duty rates today are. And another thing I have to say is the domestic capacities are increased dramatically in the last few years with the, of course, original Section 232, which was 25%, and now with the 50% to guarantee that. So what we see is that it's really like I can give you one example on rebar. They have increased the capacity so much that you don't have to really purchase imports to maintain your consumption level today. But you can still ship some to the port cities, basically because of the proximity to your consumption area. You can still sell, but if you want to go for inland, it's going to be tough. You're going to have to compete with the domestic, and domestic prices are very, very competitive because of they have extra quantities. Is anyone here shipping more to the U.S.? Are you guys exporting to U.S.? Yes, no. Okay. Next question is on Egypt. And in fact, it was answered by this gentleman in the morning. What would be the impact of safeguard duty for the billet imports in Egypt? Is anyone from Egypt here or Middle East? This was discussed this morning. I think the duty, the safeguard number was 16.2%. The guy was explaining. And but one thing I noticed that when he was saying, and I think it is the case, where this is temporary. So since it is temporary, that means it's not really final. And I don't know when it will expire. I don't know when it will expire. Well, of course, the impact on it is, there will be less billets sold into Egypt. I don't know how much billets Egypt was buying anyway. But also whatever was going to go to Egypt probably will go to other MENA countries. Do you know more about Egypt?
Definitely, we will be seeing some decline on the import of the billets in Egypt. And Egypt imports some material from also China, yes, but it looks like it's going to also affect the import of the billets all over.
So their biggest source is China?
Yes. From Southeast Asia, we've been seeing some also handling some shipment from China, from Southeast Asia to Egypt.
Makes sense. All right. And the next question, Far East freight market trend. Well, we're also importers from Far East, so we have done both bulk and container. I can say that the container rates did go down dramatically. I mean, we were paying at times during the COVID years, like 4,000, even sometimes 5,000. I heard numbers even much higher. Today is around 1,200 per container. So it has come down dramatically. And I don't think it's going to go up anytime soon because there's really no need for it. On the dry bulk, the rates are relatively stable. I mean, there's a Baltic Dry Index, I think it's called, BDI is 2,200, 2,220. So the bulk rates have been steady. For a while, the bulk rates went up with the Red Sea crisis, but most of the Chinese were exempt from that, so the Chinese vessels were going up and down with no difficulty. If we talk about the total freight markets, we have to talk about tankers, oil, carriage, and oil flow is actually still going and going strong. So that market is really high, and it will stay that high because there's no change to it. So really, if you except for the container rates, I think the other rates will be steady.
In Atlantic Ocean, the trade that we've been seeing from north part of the Russian, mainly we've been seeing some grain businesses. But since we've been seeing some lack of the demand for the steel business as well, so which is affecting the flow of the shipments from in Atlantic Ocean. Far East, we can say that compared to previous years, we've been seeing some freight is more stronger than some of the authorities. They've been expecting that after the Chinese New Year, the freight for the bulk vessels is going to come down. And we can also give you some freight idea from Southeast Asia, China to Turkey, Mediterranean. Based on the 50,000 ton vessel from China to Turkey, $37, $38. For the Black Sea, $40. And from China to Mediterranean, $35. Black Sea, $37, $38. And also from Southeast Asia to Mediterranean is about $32, $33. And Black Sea is $35, $36. So we can see roughly is 40, below 40 numbers.
I have to say, us traders, we don't do those 50,000, 40,000 tons anymore. So it has nothing to do with our business, unless you're shipping grain or maybe iron ore or something. But majority of our trade, the numbers are, well, not 30s, but they're like 50s, 60s. I think, I don't know.
Yeah, I agree.
Does anyone want to more comments on freights? Anyone, any shipping company here? Okay. All right. The last question is, what is your forecast and outlook about construction market demand, supply balances in each major region of the world for the next 3 to 6 months? Well, some of these questions were actually, we had a nice presentation on Middle East and Africa, I have to say, mostly for Africa. And I think that maybe we can go one by one, but I think the looks like Africa will be, will have continued increase. And we were shown this morning that there's close to 5% increase mostly in Africa. And Latin America has been good. When I say good, it's been steady. On our last meeting, we saw like 4 or 5%, and I would say that today is the same, no change. Central America is the same also, and there's still growth there, but it's not as big as the South America. Europe is a problem. Europe has been really probably the worst among all these markets, and probably you can mention about the Southeast Asia and the others as well.
Sure. As a Chinese company, we've been also facing a serious problem for European markets because the problems that we've been all facing for the quota system, tariff, CBM, there are lots of uncertainties. And the uncertainties not only for the Chinese side, uncertainties for all the supply from Turkey, even internally in Europe as well. So there's going to be some declaration from the European Commission, which everybody is expecting regarding the also some import taxes, quota reduction on the quota system, and also like a CBM regulation as well. And so when we look at one of the market which is relatively not protected, Middle East, because in Middle East, till 2 years ago, Middle East was one of our biggest supplier to Southeast Asia. What I mean is hot roll coils from Saudi Arabia, the only one. Rebar, wire rod billets. We were also the biggest exporter from the area to Southeast Asia, but unfortunately, we've been seeing a very, very big differences. For example, today, the rebar prices generally, globally, we can say 540 level, wherever the destination or wherever the source is generally. But the destination to Southeast Asia, CNF basis today, it should be level of 480 in order to be workable, which is not the case. So Middle East became the out of the game for the supplying. Now Middle East is the, we can say, net importer. And the Saudi Arabia is the one of the market that keeps on declaring some projects with the biggest expectation. Yes, do we see some reflection? I'll definitely say yes. Yes, we've been seeing some reflection. And one of the biggest market in Middle East, UAE market, but I don't want to make any comment about UAE market since Mr. Pandali is here from UAE. Also, can we get also your idea, Mr. Pandali, about, can we have there some microphone? For the, Mr. Pandali, please.
UAE market is, at the risk of jinxing it, let me say it is booming. It is a island of success in an otherwise sea of general, depression, so to say. I expect this is driven by strong construction demand, and we expect that this will continue for the next year and a half. Demand will be strong. There are a number of projects. The concern is not the demand. The demand will be there. The concern is the supply, because UAE is like a shiny object. Everybody is now looking at it. So we are thinking now that, we are hearing now that Saudi wants to enter UAE. We are hearing that China wants to enter UAE. So far, so good. Demand, supply, largely balance is there. Going forward, I worry that more and more people will enter, and that could create some issues in the market.
When you mention like China wants to come to UAE, but they're selling basically your raw materials to you there, right? They can't compete with the projects in UAE. Can they compete the projects in UAE directly from China?
Technically, they can, if they want to. They have to bring their products, pay the duty and sell. But the Chinese prices being what it is, as Mr. Hussain knows, if they want, they can. Right now, they're not doing it. But I foresee, because there are so many mega projects coming up in the UAE, like the largest airport in the world, the new metro lines, the railway link from UAE to Oman and so on, that there is going to be huge demand.
Can like China or any foreign country can compete on those projects, or is it only local?
There is no restrictions so far.
I see.
UAE is an open market, so there is no restriction. They have to, obviously, they have to pay the duty.
No official restriction.
There's no official restriction.
Really, no restriction at all.
No. When Dubai Metro was the first Dubai Metro was built 8 years back. 50% of the steel, the Burj Khalifa, 50% of the steel was Turkish.
I thought that in UAE they will always buy, local for as long as local is available.
It's not. There are many Abu Dhabi projects which require local steel, but not in Dubai.
Interesting. I'd like to see some more participation in this way. So what I'm going to do is ask you a few questions, and I'd like you to tell me yes or no, okay? On CBAM, which is the European restrictions that put on the world, how many of you do agree that CBAM is necessary and it's really something that you all should be basically abiding and paying for it? Can you raise hands who agree with CBAM? 2. Okay. That's interesting. Okay, so let me ask the other one. How many of you do not agree with CBAM? Well, I have seen 2 agree. Let me see how many do not agree with CBAM to be imposed on the mills. Come on, the others don't have a point of view. I got 3 gentlemen to say, okay. Well, I'm also against this, so let's make 4. Okay. Let's talk about the scrap price. How many of you think that in the next 3 months, let's say next quarter, the prices of scrap will go down by, let's say, 5%? Wow. Nobody thinks that the price of scrap will go down by 5%. Only 5%. I didn't go too high. Okay. How many of you think that the price of scrap will go up by 5%? Oh. That's right. Okay. 4 or 5 people. And how many of you think that next quarter scrap price will be the same? So I think, at least from the hands I can count, the going up has got 1 more person. So my guess, at least what I understand, is really there is no market. So I thought that it will be pushed down, but who knows? On that note, it's hard to say rebar price, because rebar price is very, it changes from location to location. But let's say typical export rebar prices, how many of you think that in the next, quarter the prices will stay the same, rebar prices? And how many of you think this rebar price will go up? 3. Okay, interesting. And how many of you think that the price of rebar will go down? 2. Well, I think, we're just all even on this one. And I personally think that it will probably stay the same because of there's a lot of pressure on it, but it's already low. I don't know how low it can go. That's the problem. Otherwise, I was going to say it will go down. Do you have any other subjects that you want us to talk about? Please.
Why do you think CBAM is not a good idea?
Well, number one, I come from States, and my president said it's BS, so I'm just teasing. Well, it is something that is so artificial, okay? And you're trying to save the world by only limiting access to Europe, okay? The rest of the world will do whatever they want to do. So you're creating unnecessary duty on the importers. So to me, it's basically import restriction that you have created. And if you think about majority of the mills in Europe is also blast furnace, so how are you going to equalize that? So if in that case, all the most Turkish should have 0. No, not to worry about. But all the Turkish mills are rushing to get solars, windmills, because they're so worried about the CBAM, I'm thinking first Europe has to think about their production. So it's not fair. But I'm so glad to see that somebody is worrying about world pollution. But my biggest fear is, this morning you heard, India is increasing their production. India is going with all blast furnace. So Europe and US is going to work about the environmental concerns, our footprints, and the other guys are going to pollute as much as they can. It's not right. That's why I think that.
And also China, 50%, 57% of the total global production handled by China. And 90% is the blast furnaces. And plus Southeast Asia. When we add it, we're talking about 60% of the total global production, also blast furnace. So I call it as a modern anti-dumping, the CBM.
And we have to figure out who's getting the money. I mean, it's like, I remember in 2008 when they start talking about this exchange of carbon footprint, who's going to pay what. I thought at that time it's a big unknown, and it still is. I mean, it's good that we are more conscious about it. It's very good, and I'm glad that locally every government should be paying attention to theirs. But how are you going to compare with what India or China does versus what we do in the US or mostly in Europe? It really is very relative. Any other subject that you guys want to? I mean, do you traders here? I mean, I think we are going through the worst times because the world is becoming very localized. Our international trade is becoming very local trade. Almost all the countries, especially on rebar, almost every country now produces rebar. It used to be produced in certain countries and we used to export everywhere. I mean, 40 years ago when I started, we were exporting from Russia. Not too many countries know where we're coming from, where we're going. Now, almost every country that we used to export to does produce the rebar. Now, it's only few items that's left that not everybody produces. So, on trading, our traders are really more squeezed with this, anti-dumping. Now, there's the sections 232s. I mean, U.S. imposed and then Canada imposed. I mean, it's like. And they're not going with 5–10%, they're going with 50%. It's crazy. Basically, they're saying just go out of business. And I don't know how we can change it, but we don't really, and traders, we just let it be and just go with the flow. We don't even talk to our governments and explain our situations that, the free trade is the best trade in the world, So there's no more free trade, It's basically it's all localized and it's all controlled by every government. I mean, you just heard Egypt now it says there's a restriction on billets and whatever. So it's not free trade anymore. But we, the traders, are not doing anything about it. We don't have any voice, and I thought that. At least this form could be a voice for you, and then maybe we can have a resolution coming out from the traders, because our mills get together and they decide what they want to do to us, and we just take it. All right, that's all I'm going to say. Thank you very much.